Mitchell Stankovic Associates and the Underground Ideas into Action presents The Underground Chats, authentic conversations with credit union thought leaders. Today's chat, Member Wellbeing and Trust, with John Fenton, President and CEO of Affinity Federal Credit Union.
Well, thank you so much for joining us. I'm so excited to see you. When we have a chance to reconnect in our industry, it's just fabulous. So how are you doing? How's the family doing? How's the credit union doing?
Good. Well, fortunately, the family is all doing well. Not only my immediate family, but my extended family. We're all healthy, and we've stayed healthy through all of this stuff, which is unusual. Think about where we live. We're basically in the epicenter of where this thing really started, and so we feel good about it. But I can go back to just a couple of weeks ago. Our holiday celebrations, where I usually have 25 people from my direct family in the house. We had 5. And so, you have your Zoom meetings to celebrate the holidays, but it's not the same. And so, we're missing a lot of that. I think the word fatigue comes out a lot now with the COVID crisis, and I truly do see it virtually everywhere I go. Not only with my kids, what we were just talking about with them suffering at their age and that whole generation getting stuck in that mode, but virtually everybody you talk to. It's a different environment, and we have to get past it. Try to think of what the next normal is going to be. Because it's funny. Everybody's talking about the new normal. Well, that implies that it's not going to change again. Well, the world continues to change. So how do we adapt to that change? That's really the question. And this has been very difficult for all of us. Now, that being said, on the Affinity side, I'd like to say it's a tale of two sides of the coin. One side, we had a great year. We did really well. We had record-breaking mortgage originations, as an example, and a lot of that was driven by where we are. People are moving out of the city, so even purchases took off in 2020. We had refinances, obviously, because of the interest rate environment. So that was all a great thing. Lending was just up in general. Think about PPP alone. We did a lot, for over a very short period of time to help our small businesses out, and so those things really went well. Now you turn the coin over, and probably 25-30% of our members are hurting. I mean, they're out of business, they're out of work. So we did a pivot there, to make sure that we're paying attention to them and doing the loan deferrals that they needed. And we even shifted our foundation to support the food banks because, people are literally starving to death. And that's a sad statement, considering, 3/4 of the population is doing okay, and then the rest of them are really hurting. So I think that's why we're in the business that we're in, the credit union business. But to see that those two sides is very unusual. You're usually up or down. It's never both at the same time. So it was an interesting year from that perspective.
Well, the disparity that you just mentioned, I think we're really starting to see now. So it's interesting that you were ahead of the curve, if you will, in pivoting your foundation. For context purposes, you're located in New Jersey. Your
Right.
field of membership expands throughout the whole state. John, tell us a little bit about that.
Yeah. So, well, it's not only the whole state. We did a merger a number of years ago that took us up into New York State and into Connecticut as well. So, we have a tri-state area, but our original sponsorship was AT&T corporate. So we have members in all 50 states. We have members in 65 other countries around the world. So, we're pretty diverse from that perspective. And that's, that makes you think about it because not just the tri-state area is not all the same. So people here versus Connecticut is actually a big difference. And so we've had to shift the way we look at our members, that were traditionally served as a corporate company, a credit union, to those that are more in the community. So it's just a different way of looking at it. And each community is different, which is good because it creates a lot of opportunities for us.
As we look to the future and we're talking about that disparity and 2020, and the fact that you responded to it. What carries over for you in 2021? I mean, what lessons did you learn, and how much did you go virtual? How much are you back to branches? I mean, that whole conversation is one that I think we're going to be having for a while.
It is, and you know, I've talked about this with some other groups. We went and a couple of years ago we started going on our digital transformation, just like everybody else has been doing it. So we were pretty digitally ready, and we were able to close our branches down like we had to. You know, we were forced to do that. But we went totally remote. We've actually been 100% remote. Today, we are about 80% remote. I mean, we have a 200,000 square foot building here that I think there's about 30 of us in the building. So there's plenty of room here, but most people are living at home and comfortable living at home because they still have child support issues, parental support issues. That hasn't changed. I mean, we're still in COVID right now, and so we're still dealing with a lot of those issues. And so the good news, though, as we looked at that whole remote environment, we actually became more effective. So go back to where we're located. Well, New Jersey is the most densely populated state in the country. Before COVID, I only live about 20 miles from here. It would take me an hour to get to work. And most of our employees, it would take an hour to get to work. Well, now we're saving that hour at the beginning of the day, saving it at the end of the day. So there's 2 hours that they have to spend with their families and be more productive at the same time. And so we've actually seen that. And it's funny because over the years, we've always had people say, well, why can't we telecommute more? And we've tested it and done little bits and pieces of it. But we were forced to go almost 100% of it. And it actually worked. All those fears that we had over the years melted away. Now, we had to be ready for it. The systems had to be ready. And so, again, I think a lot of institutions were caught off guard. They weren't as ready as they thought that they were. Fortunately for us, we were ready. And so that enables us to stay there. And so one of the things we learned is that you never go back. That the new normal or the next normal that we were just talking about is here. And so you can't go backwards, even though human nature is to hate change, to want to go back to where it was. They're looking for the cheese, so to speak, right? We're not going to go back there. We're going to keep our branches closed. We have automated schedulers. So if somebody wants to get into their safe deposit box, they can schedule time and get in and use the branch. But it's we have done everything virtually, even with our members. So Zoom is a new topic with members. So they call up and say, I need to come into the branch and talk to you. And we'll say, what do you need to talk about? Well, let's do a Zoom meeting. And we do. And our members are loving it right now. Before the pandemic, 75% of our transactions were done by us in branches in our contact center. Those same 75% of transactions are now done by the members. So the members adapted really well to this environment. And so why would you want to go backwards? So the real question is, well, how do we fill those voids? And I can talk about what we have initiative-wise coming up that allow us to fill some of those gaps. That's very important for us to do it, but going backwards is not going to be one of them.
I love that. And the question I have before we move into 2021 is, you also had a pretty robust investment portfolio, working with your members, and the fact that they were able to come to you guys to do a whole myriad of services. So has that worked out well with Zoom as well? Can I do private counseling with Zoom, and some of your business development? Is that Zoom? How are you handling that?
Yeah, so we're handling it really well. Again, it's up to the member to accept it, and you got to do it enough times for them to get comfortable. Again, we started a couple of years ago internally using video chats and stuff like that, because we've got branches all over the tri-state area, and you really can't afford to be out on the highways driving to all those branches. So we got used to doing these kind of meetings all the time. Getting the members there, they weren't as used to it. Although I think today, if you mention the word Zoom, everybody knows what that is, and they're pretty much comfortable with it. Now, you go to the younger generation, and they live on this stuff and always have. So, there's those two components that we're looking at, trying to get one to use it more and trying to get more people comfortable with it is where we are. So the real challenge was, if you remember back in February, Zoom was having problems with security issues and stuff like that. Well, that created some angst on the part of the members. I think we've gotten past that now. Now, you have to be careful, and there are some protocols that we have to teach the members how to use all of these things, but it's safe for them to do and conduct business virtually. And they are loving that because, again, they're stuck in their homes. They can't get out. They don't feel comfortable coming out. We still have some issues with state regulations where the state of New Jersey loves wet signatures. They hate anything digital. And so, all that mortgage volume I was talking about, well, we still had to have notaries and we had to have people come in and sign things, which they do in our parking lot or at our drive-ups, just to get it there. But we're trying to work with the legislature here in New Jersey to change that so that, we can move the state of New Jersey into 2021. So there's a lot of disparities around it's not just us that's dealing with this. There's all these other things that we really don't have control over yet to make those changes.
Well, it's fabulous. I was looking at your financials, if you will, through September, and you guys have been able to maintain your net worth, and you're looking at some of the growth. Now, you've had the asset growth that everybody else has had too, in terms of deposit growth, but you've also been able to keep a good loan to share, which, from an industry perspective, as you know, the mortgage volume has helped with that, but it's also something that we're going to keep an eye on in 2021. So net income, being able to generate, service income. I'm fascinated to see what you're going to do now, because with this, the virtual, you have an opportunity maybe to take a look at costs and take a look at branches, or take a look at how you're going to propel into 2021. What's your thought?
Well, so going into 2021, that's exactly it. There's two major initiatives that we have. One is that digital transformation that we started a number of years ago. And usually when you go into a digital transformation, it's, that's the data, that's the analytics side of it, and using all that data to understand the member and to become more predictive and prescriptive in meeting their needs, and individualizing all of those things. So that's gonna continue. But then you start adding on to that. How do you look at all that data? Humans don't really have that capacity. So artificial intelligence and machine learning are really critical to us. And building out that, the first thing you really see are the cost efficiencies there. Our contact center, before we started putting in conversational AI, would handle maybe 15, 20,000 calls a month. We have the capacity to handle, and are handling well over that, to go into hundreds of thousands of calls a month. And so just think of how much better the interaction with your members is. Your member service levels really improve because of all those kind of things. But at the same time, I actually need less staff to do that. So we're looking at not reducing staff, but not growing staff as we continue to grow. And so that's already happening. Same thing in the branches. We look at our branches now as an extension of our hub, we call it, our contact center. So they're doing outbound calling, they're talking to members, which breaks over to the second initiative that we really started a couple of years ago that we really want to focus on, and that's members' well-being. Now, well-being is much, much different than wellness. All of us, I think, have been working on wellness with our members over the years, and that's, teaching them how to budget their money and do the right things with all that, their investments and whatnot. But what we found out that, there's a whole well-being is how do you feel, and how do our members feel? We have people that are struggling right through thriving. And it has nothing to do with their income levels or how much their family makes and whatnot. And so how do we go back after that and really turn our brand into serving our mission, which is to improve our members' lives and the communities we serve, and do that in a way that they feel good about how we help them manage their money, but more importantly, what they do with their money. So, it's all about member behavior, and our behavior is, I saved my money so I could provide my kids' education, or so I could retire, or so I could take a vacation. Well, when you feel good about those kind of things, then your well-being improves. And I think that's something that we really feel good about. The members are feeling good about it. So I'm going to circle back to what I just said. Our branches are now outbound calling centers. So when the pandemic took up in February, March, we started calling the members because they weren't coming in and just asking them, how are you doing? How are you feeling? How do we help you? And they go, why are you calling me? We said, just to do that. We wanted to see how you're doing. I can't tell you how many compliments we got from our members that said, thank you for checking on us. And that's all well-being is. But think about it. We're not providing just financial services, which is a huge commodity, right? We're providing something that means something to them. And so are they going to look to come back and do more business with us? Well, hopefully, yes. But more importantly, do they feel good about their financial system, which has been very difficult. We love to hate it, as you think about it.
Yeah, it also is, as we look at leadership and we look at the future, emotional intelligence has been something that we've talked about for years, but I do believe deploying an emotionally intelligent business model is critical to today's environment. And just the way you described that actually gave me a little, chills here, because when you talk about well-being, you're talking about my mental health too. You're talking about the things that are hard to make tangible from a financial education. And I think we've moved beyond, I agree with you, the whole concept of financial literacy. I think we are in a place today where it's about what is it that I want to accomplish and how can I also support the people around me? And I think one of my lessons coming out of this year is, without us having that day-to-day contact that we're used to having, I am wondering how people are doing. So that seems so genuine when you reached out. That's amazing. That has to also be a good thing for your team. They must enjoy this as well.
Well, it is. And again, being in this business, you feel good about helping other people. That's why we're here. But it's actually different too. Think about it. We're asking our people who in the past were transaction processors, right? And now you're asking them to have emotional intelligence and have conversations that they really weren't good at. So there's a lot of training that we're doing. And if I can think about what the big change is going from wellness to well-being, it's all of that education, not only of ourselves and how to interact with our members, but the members too. The members aren't used to having those kind of conversations either. And so there is a lot of training going on here at Affinity. I can assure you that. And it's not everybody is capable of it. Emotional equivalence is not something that, again, is often tied to the transactional competencies that we, again, used to have and still need. But machines can actually do that a lot better than we can today. And so how do you transition to that? That's what we're looking for. We're grooming them. But, unfortunately, we have to have some turnover, too, because some people just aren't capable of it. And our members really need us to have that capability in order to move forward.
You took me back a few years, because I remember when I was in a training environment, one of the things I would always say to the frontline staff is that you know more about me than sometimes my best friend, because you know my financials, my habits, and whether I bounce checks or how I handle my life. And I always tried to make that a special connection for people, because I don't necessarily trust people to have that information. So I can see where it was both the member, having the trust, if you will, that's where you're going with it. And then also the team. I love that. It's like going back to some of our core values.
It is, but I'll give you a quick story about why it's so hard. Think about it. It's generational, I think, but I know we talk about being predictive of what you do. So we're analyzing all this data. So I do know a lot more about you than you probably know about yourself half of the time. And so I'm ready to offer you something. You walk into a store and I've got a message going out to you that says, I'll offer you a special rate on this if you do something like that. And I've actually had some of our older board members say to us, you can't do that. That's infringing on my privacy. You can't. And I'm like, we're already there. The world is already there. We're not doing it now. If you don't like it, you can tell us. You can opt out of that. But you got to get comfortable and you have to trust us to do it. And good news is the credit union industry is built on trust. I think that's one of our foundations, and it certainly is at Affinity. So we need to do more of it, but you got to earn trust every day too. You can't just take it for granted either.
Yeah, it's absolutely true. When you think about the blinding flashes of the obvious, the Tom Peters comment that says, out of every situation, there are times when you go, duh, we should have thought of that. And so I've been kind of exploring that a little bit. Last year, we looked at Maslow's hierarchy, and it fit into the lifestyles and financial services. And then obviously we all went back to basic hygiene after COVID hit. So it's like, it's very timely. Now I've been looking at, all right, so here we have these innovations that are happening. You're saying you're not going to go back, which I agree with. And I like the fact that you said it's the next norm, not necessarily just the new norm. I mean, what is next? And how do we anticipate that? So have you had any blinding flashes of the obvious, any BFOs that you could share with us that you think are going to happen?
So let me start with number one. When you think about well-being, remember we're dealing with financial services being a very rational perspective, right? We look at the world and we assume that our members are very rational, so they're going to go out and buy a car because they need it and whatnot. When you really get under the covers and you start studying it, you find out that there's 80% of our decisions are made irrationally. We are very very impulsive when we buy things, and this is a consumer economy, right? So you think about that; it changes the way you think about things. Why do people do the things they do? How do you plan to be there when they need it to? When there's nothing rational about the way they're going to go, but there are signals that come out, and so using data and studying that data and actually coming out with conclusions that help us to understand that irrational behavior is probably one of the big things that we have to focus on, and we're not good at it yet. I can tell you that. But if you look at other BFOs, the world didn't just change for the financial services. Think about everything has gone virtual. One of the biggest things that we do as a credit union has always been auto lending. And we've always had this fear because, our members go in to kick the tires in a dealership, and then we lose the funding or the financing on it because they're just better at it. Well, nobody goes to dealerships anymore. You've got Carvana and all these different new virtual places to go, and they'll just let you shop online and go out. So we're trying to get into those loops. We're working, there's the Costco's of the world and everything that allow people to do everything virtually, and we're trying to attract attention to Affinity through those channels. So it's just figuring out what that new world is for everybody else, and then trying to be put into those situations. Again, there's so many of those examples out there. Again, the world is totally virtual today, and I don't think members are going to go back there. I don't think people are going to want to go back to car dealerships. I think most of us hated that to begin with. You love the smell of a new car, but having the dealer stand there saying, you got to buy this now. That's not a fun time for everybody either.
Oh my gosh, I could tell you it's like one of my worst experiences. And there's just some kind of need that my husband has to bring me along, even though he's going to ultimately make that decision. It's like, but I agree with you. It's not only the like you said, financial services, but it truly is a behavioral thing. Even traveling, one of the things I've learned with client engagement is that I would travel, spend 8 hours getting to a location, and then I'd have an hour meeting. And so the efficiency of our time and how we're going to use it, I definitely believe that we want the warm and fuzzies. I want to be able to see you. I want to be able to see the clients. I want to see friends. I want to travel to conferences. But I also am going to be much more discriminating in how I do that, both from a cost standpoint and also just because of the world and the continuing shift. Because like you said, it's also the what's it going to take to travel, the fact that we're going to have to quarantine, and then we're going to have different procedures everywhere we go. As you know, we're in Las Vegas, and so we get to see this consumer behavior every day. So, well, I think that looking at the world, how do you before we move on here, but the one thought I had is you've got a team, your executive team must have bought into this as well. So are they also going down this journey with you and pushing and saying, how are we going to look at new partnerships, new relationships? It sounds like you're going to look at fintechs, you're going to look at your existing relationships in a different way. How's the team coming together on innovation?
The team is coming together really, really well, and you know that I'm only as good as my team, so they have to buy into it, and so I can only introduce concepts, and I know even Wellbeing was a very, very big thing to throw at them, but I let them digest it and ask questions and dig into it a lot more, and they did buy into it and do buy into it today. We've only been doing it for maybe a year and a half, 2 years. And we're starting to see some impact to it. So it's good to see results. Long-term strategies are tough because you want instant recognition or some sort of sign that it's working, but it takes longer than that. It's starting to work from that perspective. Now, on the digital side, we've always used other players than the big guys. So when we looked to use conversational AI as an example, we found and partnered with a fintech that does just that. And we actually did it in a collaborative environment. There's probably, I think, 10 credit unions that are using that one company now, and we helped capitalize and fund that startup. And so we're looking to do more of those. Same thing, by the way, with the Wellbeing initiative. We're working with Gallup, but there's, I think, 8 credit unions that are in a consortium to do that together. We're doing it all individually as credit unions, but now we're sharing all that data and all those experiences, and we're learning so much more about it. And so I think from a team, it's not just our team, it's getting everybody throughout the industry to focus on these things as a team. And that's one of the things we've always been good at as an industry, and we should continue to do that. But you got to get the buy-in at your own shop first, and I feel really good that we have that today.
That's fabulous. I've been listening to and talking with different CEOs and so on, and the whole idea of funding startups is something that I'm seeing more entrepreneurial. Not that we haven't had it, but I do see a new emphasis on it. And there was a period of time in the industry where we were moving away a little bit from our collaborative creation. And what I'm seeing now, and maybe it has to do this whole vulnerability, is also, kind of requiring you as a CEO, your organizations, to come together and say, we need to have more control. So let's come together and be able to facilitate the development in some of these areas. So that's also an income generation that I think with the margins the way they are today, we're going to need to do more of that as well.
Mm-hmm. Yeah, you have to, but you gotta always remember that, and we make this mistake as a credit union business, that we expect the entire 5,000 credit unions to just jump on and support these things. If we can get 10 of us or 12 of us or 8 of us to do it, that's probably the most you're going to do. And even at that, the reason why we're doing it is not just the control. You got to get there faster. I laugh, if I look back just over the last 10 months, everybody goes, well, the world just put on the brakes, everything came to a halt. Well, they didn't. I can tell you, my world got a lot faster, and that's not going to stop. And so how do we turn these things around and get better at delivering these things as quickly as we can? Well, you can't do it the old way we used to do it, and go out and get patents and try everything and convince everybody to do it and look for all of these big groups to join it. It's a different world today. I think if you can get a couple of us together, it's probably a major victory.
I was just smiling because I know that you have always been a big thinker and a little impatient in terms of wanting things to happen. And so this is a good time. There's always that positive side, if you will, of what's going on in the world. And you said there were the two sides. So, okay, so we've got to get there faster. We've got to move. We've got to look at analytics. What are the ideas into action, John, that you think the industry needs to think about?
Well, so as you can probably tell, I'm really, really enthralled by this whole well-being thing. And I think, it's a brand thing for Affinity, not an advertising thing. It's a brand thing. This is what our mission is, and this is how our mission comes alive. I think, we've talked as long as I've been in this business, so 40 some years, about a national brand. Well, this could be a national brand if we can get behind it. And it's what really separates credit unions from that financial service quagmire that we're in, and gives us the opportunity to prove what we're really about as cooperatives. And I think it's just such a natural for us. But not everybody is going to be there initially. But how do we gain the members' trust on these things? Well, if you're not really sincere about these things, and this well-being enables us to prove that to them, I think you're never going to be successful. You're not going to serve your mission the way it's supposed to be. So I think that's in my world. And so not only the 8 credit unions that we're working with today, I'm talking to a lot of other credit unions about join us. Try it. Put your toe in the water. See if it works. But if it makes sense to you, again, I think we all still work on that rational theory that that everything in the world is rational. And when you realize that it's not, it makes you want to go to the other side, because well-being is all about the irrational, about member behavior, about all of our behavior, and how that carries us forward into the future.
Well, and I notice you're not saying just member financial well-being. You're actually saying member well-being. So how do I go to get information about that? Is there something online that you're talking to other credit unions about?
So there is, we work in partnership with the Callahan Group. That's how we started all of these things. Gallup is the one that actually started all of this, and so there's actually a book on well-being. And there are 5 different components of well-being. Financial is just one of them. Your community is a big one, which is why we liked it. It fits nicely into our mission, because it's we're trying to improve our members' lives, but also the communities that we're serving. And so community is a big part of it. And so you want to be able to look at all 5 of them. But I'd encourage you to look at the Gallup site, and that's probably the easiest way to pick up on information on that. And then certainly anybody wants to call me, I'd love to talk about it. I could talk about it all day. So.
Yeah, I can tell. It lights you up. I really think that anything that we can do that brings us back to our purpose, our social purpose within, and doing the right thing is also good business. And I think that's what you're demonstrating here, is the idea that we can care and it can have results. So that's fabulous. Yeah. All right. Well, I can't thank you enough for spending time with us today. And this is interesting. I didn't go there, but I'm thinking when you talk national brand, that always is, one of those subjects that the industry loves to hate, loves to love, loves to debate. So I'm excited to get feedback on that from people.
I'd be curious in the feedback, and again, we got to remember you got to start with 1 or 2 before you can get to 3 or 4, right? So you got to start small and try it. We just always go the other way. We say, well, there's 5,000 credit unions out there. We got to get 5,000 there. Well, that never works, and so we got to keep that in mind as we go forward. But it's great to see you. It's great to be able to do these kind of things. I'm glad you don't have to travel as much as possible, because that's not good physically for you to be doing all these things. But I miss the fact that we can't get together and sit down and talk all the time too. So this bridges that for us, and I'm glad we're doing it.